Infineon anticipates cost synergies from Cypress acquisition. Infineon buys Cyprus. Germany-based Infineon is buying US chipmaker Cypress Semiconductor (SI) for €9 billion or $10.06 billion. Infineon is ready to pay $23.85 per share to shareholders of Cypress, a manufacturer of flash memory chips and microcontrollers. Infineon plans to finance 30% of the deal value with equity and the remaining part with debt and cash in hand. Infineon shareholders are expected to benefit from earnings accretion in the first full fiscal year after the deal is closed. Synergies from the deal. The acquisition of Cypress is also expected to generate annual cost synergies of €180 million by the end of 2022 and revenue synergies of more than €1.5 billion in the long term, which might help Infineon, as it is struggling with sluggish revenue growth and pressurized margins. Notably, Infineon makes about a quarter of its sales in China, which is also the world's largest car market. However, the slow demand in China has significantly dented Infineon's performance and has already led to a cut in its 2019 revenue and margin guidance twice this year. The sluggish Chinese auto market has also led to an inventory pile-up, thus pressurizing the margins in the second quarter of fiscal 2019, ending March 31st. The company continues to expect third-quarter segment result margins to remain pressurized due to a slowdown in China. Infineon forecasts third-quarter revenues to grow by 1% sequentially, but the segment result margin is expected to be at 15% for Q3 2019, lower than its 16.7% margin in Q2 2019. For fiscal 2019, the company expects its segment result margins at approximately 16%. Upon successful closing of the merger, which is expected by the end of 2019 or early 2020, Infineon aims to increase revenues 9% and its segment result margin by approximately 19%. How will Infineon acquisition deal benefit Cypress? Cypress's buyout offer Cypress Semiconductor (SI) stock rose close to 24% to $22.07 on Monday, nearing an 8-year high after it received a buyout offer from Germany-based chipmaker Infineon Technologies AG for $10.06 billion. Last week, the San Jose-based chipmaker had reportedly shown interest in becoming a takeover target. Deal details. According to the deal, Infineon will pay $23.85 per share to Cypress shareholders using its equity, debt, and cash. Cypress shareholders could also get continued dividends until the deal closes, which is expected by the end of the year or early 2020. The deal is subject to approval by Cypress shareholders and other regulatory bodies. However, Cypress would have to pay a fee of $330 million to Infineon if the US chipmaker terminates the deal. However, under any other situation, Infineon would pay a termination fee of $425 million. Notably, Cypress had been trying to reshape itself and provide chips for use in vehicles and Internet of Things, or IoT. Moreover, the company expects its automotive business to grow 8% to 10% annually over the next 5 years and predicts its IoT unit to expand as much as 14% in that period. The acquisition deal is expected to benefit Cypress with its plans to expand in the automotive business, as Infineon generates more than 2/5 of the total revenue from automotive accounts. However, Infineon faces softness in China, the world's largest car market. Thanks for watching. Hope you enjoyed.